Good day, everybody, and welcome to the Premium Video Newsletter for Wednesday, July 24th, 2013. Starting with the earnings, we had two stock giants release earnings before the open today. Apple led an early rise in technology stocks after it beat analysts' estimates for quarterly earnings and revenue. Technically, Apple gapped up strongly, but if you look at the overall resistance level, it doesn't seem like Apple broke it. And unless we take out the high tomorrow by a reasonable margin, I'm anticipating the stock to fall back in line with the downtrend. This pattern is very typical, and most of the time within a week after the dust settles, the stock moves right back in line with where it was prior to the news release. On a fundamental level, there's nothing really new from Apple right now, and competitors are doing an incredible job at copying their products. So unless there's something really new on the horizon, and I don't mean another version of an iPhone, I doubt that the overall trend on this stock is going to change anytime soon. The second earnings release was from Caterpillar, which came in below estimates and warned of a slowing in sales. Caterpillar is the leading construction equipment manufacturer and has a strong influence on the construction industry and the building sector, so the fundamentals from this company can have far-reaching consequences on the rest of the market. As far as economic news, Americans bought new homes in June at the fastest pace in 5 years, a sign that the housing recovery is in fact strengthening. Sales of newly built homes rose 8.3% last month and risen 38% in the past 12 months. That's the biggest annual gain since January of 1992. One sector that was beaten down a lot over the last decade was home builders. I believe the two biggest gains we will see in the next several years will come from banking stocks that are heavy on residential loans and home building stocks such as KB Homes, ticker symbol KBH. This company is one of the country's biggest manufacturers of new homes, and one stock you should look at for the long term. In Europe, a broad gauge of economic activity reached the highest level since January of 2012, sending stock market in Germany and France higher. Financial information company Marketed said Wednesday that its monthly purchasing managers index for the countries that use the euro currency increased for the fourth month running. Technically, the euro currency looked like it's hitting a short-term resistance area. The pattern looks like a head and shoulders pattern. If the current level holds, we may be coming down to the neckline, which is at the 1.28 level. If we break this level to the upside, the next resistance area is 1.34 level. The report out of Europe pushed prices for U.S. government bonds down and their yields up. The yield on the 10-year Treasury note rose to 2.58% from 2.51% late Tuesday, while bond prices experienced volatility to the downside. Technically, the 10-year bond market never broke the long-term uptrend and is now following through to the downside. Most of you know I'm very bearish on bonds for the long term and believe interest rates will be moving up in the near term. Keep in mind that the U.S. economy really has to improve before this happens, so I think we have a bit to go. For now, I'm anticipating a break below today's low. We have a small 3-tick gap between the 125.23 and 125.26 level, and if we fill that gap, I think we will come down to the low 114 level. The rest will depend on how the stock market reacts in the next several days, but right now the short-term trend is definitely down in bonds. Let's look at crude oil. Notice yesterday I stated that if we take out yesterday's high, we will go higher, but we didn't. Instead, we took out the low, and it looks like we're going to go lower in the energy sector. Frankly, I'm surprised we kept the strength for so long without retracing just a bit. But we are finally here, and I think we can still go down to the 102 level and still without remotely breaking the trend line to the upside. Expect some weakness, but I'm not bearish just yet. I will need to see some really weak trading action or some fundamentals that suggest the shortage of crude is over before I switch sides in this market. Looking at the US stock market, even Apple couldn't maintain the upside momentum. The increase in value over the last few days did not seem natural, especially in light of the low volume we saw. I'm anticipating a correction for the next few days, and if earnings are negative for the remainder of the week, we will see a substantial selling pressure. Just imagine where we would be today if Apple gapped down instead of up. The transports are really selling off substantially more and gaining volatility at the same time. This ETF is beginning to look bearish, and I think we will need to see some very strong non-tech earnings to the upside to reverse the sentiment we are seeing in this sector right now. Keep an eye on this ETF because the transports do tend to lead the markets a great percentage of the time. There's a few setups for tomorrow. When markets are quickly switching modes from uptrend to downtrend, the setups tend to decrease, so there's not a lot for you today. But here's a few to look at for tomorrow's trading day. There's a long tail gap on Seagate Technology, ticker symbol STX, and a 4x4 breakout to the upside, which is also a 52-week high on Baidu Corp, ticker symbol BIDU. That's it for today. I will update you tomorrow morning as usual and earlier if anything new develops. Have a wonderful night, everybody.